My name's Ethan Braid, and today we're going to compare a balanced portfolio against the S&P 500 so that you can get an idea on how much you could make or lose under very good and very bad market conditions. So, what I have behind me here is a chart that I'm going to develop to show you a range of potential outcomes for two very different portfolio strategies. The first is going to be the S&P 500, an all-stock portfolio, and the second is going to be a balanced portfolio. My definition of a balanced portfolio for this exercise is 50-50 asset allocation. That's important to note because not all financial institutions will classify a balanced fund in the same manner. A robo-advisor may call a balanced fund 60-40. A bank may say it's 70-30. You just never know. So very important point of distinction there that you want to be aware of. In my case, I'm calling a balanced fund 50-50 asset allocation, half the money in the S&P 500, the stock market, half the money in cash, T-bills, and bonds. That's your traditional balanced fund, in my opinion. Now, we're going to start with the S&P 500. So let's say we have an exceptional year in the S&P 500. Our best case scenario, we would expect to be a 50% rate of return for the year. In our worst case scenario for the S&P 500, we could lose as much as 30% in any one given year unpredictably. Let's compare that to a balanced fund. And by the way, we're looking for a mean expected return in the S&P 500 of about 12%. A balanced fund is going to offer a lower return over time. Okay, we're looking for an 8% rate of return here, and our upside is going to be less. In a great year, we might make 33%, and in a really bad year like 2022, we might lose 17%. Okay, now what can you do with this chart at home? How can you relate it to your money? Let me show you. Just put your dollar amount for your portfolio right here. Okay, just write your number in at home and then multiply by these percentages, and then you can create your own range of returns. I'll give you an example. Let's say we have $1 million. We know that in a great year we could make $330,000 in a balanced portfolio, or we could lose, like 2022, $170,000. We're hoping for $80,000 in a typical year. With the S&P 500, we know we could make $500,000, or we could lose $300,000. Now, this approach, I'm just going 2 standard deviations above and below our mean expected return. 95% of the time, our return is going to be within these numbers, minus 30 plus 50. About 2.5% of the time, we're going to be worse than minus 30 or better than plus 50. Will be outside our 2 standard deviations. I love this approach. And the validity of this approach is that if we look at the data, look at the last century in the stock market, 5 times, 5% in the last century, we've exceeded 2 standard deviations. So for those of you watching this video that like statistics, this approach works. Let me show you for reference those years. 1933, up 54%. 1954, up 52. 1937, minus 35. 2008, minus 37. 1931, worst year on your record, minus 43. So again, this approach works. And now is a great time to really be thinking about this. It amazes me how many families I've met with over the years, and it's in the hundreds of wealthy families that I've met with, who have never been through this exercise, or more importantly, their portfolio was not aligned with how they feel. For instance, you might be all stocks, but not willing to accept this type of unpredictable loss. And that's important, especially if you're 5 years from retirement or newly retired and you haven't really thought about your portfolio construction for a number of years. I remember the early 2000s vividly. Why? So many people that I met with who just didn't understand or appreciate the amount of risk that they had in their 401k. And oftentimes they were retired or newly retired or about to retire. They were close to that retirement age. And I'll never forget what it was like in the early 2000s to meet with people who were devastated. They lost a lot of money because they didn't appreciate how aggressive their portfolio was. No one ever explained to them how much they could potentially lose. So this is a very, very important topic. Please share this video with your friends. Tell your coworkers. If you're just learning about this for the first time, it can't be overstated. So I hope this video was helpful. I hope this video gets you thinking and helps you to better analyze your financial situation and improve your family's financial plan.